Hi, Warriors. Who's ready to exploit opportunities this week with me and the whole team? Guys ready? How you doing, Mike, Sinatra, AJ, and Alexander? How are you? Steve Bartholomew, Ryan's in the house, Bran. Okay, Hugo, John Hawkins. Got the whole crew, and we have a full house today. Special appearances. Hi, KM. Welcome to Face by Stelios and Grega. Okay, so let's go to work. Okay, move Steve out of the way. So yen, just a little teachable moment that down here when I was advising buying the yen in this falling wedge here, the target was 51, which was the top of the wedge on this trade. So we got there and then we retested it. And I talked about it Friday, getting short. It was at 51. Um, I'd sell rips back at 150 if you get them. Okay, because this is happening. Was just a corrective pattern in TLT to 88 and a half. See this? And now we're on our way. You know, if you had a flag line, looks like it's, be taking off again. Um, I think I talked to Jim Walsh. He's looking for 96. So, I mean, that's 5 handles from here. Something to exploit if you get any kind of pullbacks. Of course, the dollar I still think looks lousy, even though it's trying to bounce. Really anemic. You got to sell rips there. Protect euro longs under 107.30. You don't want to see it take that out. You want to see new highs before this. And gold marches on to new record highs. Uh, Actually, I'm very surprised that gold has taken over leadership again. I thought gold silver ratio was going to break down. The opposite happened. But I just want to show you guys something here. So take a look at the gold here. And you see RSI's confirming this is what the 4-hour TF. That's the 4-hour TF. Okay, now look at this. And now look at the miners. GDX is an ETF. Look at this. Okay. All right. Now, between the miners, look at this that you're seeing right now, GDX, and look at this. It doesn't look much different. And that's why you have to use your longer term time frames, unless I do this, at least a daily. Okay. Now you can see that instead of testing 52-week highs and making them and breaking out, the best Newmont could do on that move in gold from 1,800 to 3,000 was really just correct. And so I'm a believer in relative weaknesses are my preferred short. So if I'm going to top pick in gold, what am I going to look for? I'm going to look for the weakest structure. Okay. We came down here and held, and this whole advance, look at this advance that we had in Newmont. Look at the advance we had in GDX, even some of the small ones or silvers, not that great. Anyway, I think the metals, I look forward to hearing Stel. I know that silver's not at my target yet, but I bought Newmont puts today. Bought the June 4250s for $1. So bought some lotto tickets that the miners are crowded, even though people hated them. They didn't, people can hate something and they usually hate it because they're still long. So a lot of the miners did well, finally, even when the gold bulls hated them. But they're showing me signs of relative weakness to bullion, and then Newmont is showing relative weakness compared to GDX. You guys understand my rationale for that? Um, I came out prematurely last week. I was in NVIDIA puts. It's going to come in lower, down at about 105. So NVIDIA is still not making new lows. It's right there though. Okay. Um, yeah, I got out of them here. And I remember I said the banks were the most worrisome part of the whole decline. And so I bought B of A puts um, on the 50% to 61% retrace, again, relative strength, comparing B of A to XLF, much stronger. So why don't I start off with Ryan? Ryan, top of mind for this week. I know that we have a lot of stuff going on, capped off by NFP. Where's your head at? Top of mind.
My head is all over the place.
All right.
We've got whatever this bloody Liberation Day is tomorrow, which is Trump spouting off about tariffs and whatever. So we've got that to deal with. We've got the RBA tomorrow morning.
April Fools.
Yeah. Oh, sorry, it's not Liberation Day tomorrow. Is it Liberation Day the 2nd? Sorry,
Yeah.
he isn't doing
Yeah.
it. Yeah.
See, you
So
pulled an April Fools
yeah,
unintentionally. All
I
right,
don't
go
even know
ahead.
what day's coming. That's how muddled
All
I
right.
am. But yeah, we've got that to deal with. We've got data to deal with. We've got the final PMIs, we've got the ISMs, ADPs, JOLTs, you name it, we've got it. So take it day by day, I think is the best way forward for this one.
Do you like the way Canada's come out of here? I mean, I think I'm not the only one that had this line where it looked like it was breaking down, and now, you know, unless
Yeah.
it's just pre-positioning for April 2nd, is everything April 2nd buy or sell the rumor and then buy or sell the fact?
Could
Is
be.
that, yeah?
It could be. I've got a slight. I'm feeling a bit more nervous about this deadline than I was the last two, just
Okay.
because when we got close to it, we started hearing concessions and this and that and the other. Maybe the days today. So yeah, I'm not as positive about the deadline and the Trump stuff than I was on the other two deadlines. So yeah, we could be in for trouble, but you've got to react. You can't, there's no point trading in front of it because it could be a light switch moment.
Yeah, I mean, I was convinced about yields. That's why, I took
Yeah.
the short yen position. It took a while to convince me. Stelios has been saying it all along, but I mean, we're leaving a pretty big gap here
Well,
today.
we were breaking that 434 last
Yeah,
week and
right.
running up to 440, and now look, now we're going
Yeah,
the other way and looking like breaking 420, which
yeah. It
is
looks
another big
like,
level.
on a weekly, you could almost call it a bear flag, right? It
Yeah.
doesn't look like that here,
I was
but
going
if
to
you,
show that on the daily. But anyway, I'll
oh,
have a look at
okay,
that.
on the
No
daily, it
worries.
looks like, okay.
Yeah.
Well, you know what? There's nothing wrong with a rerun. I mean, we'll get residuals. So here's yeah, wow. That head and shoulders top too, still.
Maybe,
Three
yeah. Yeah.
350. All right. Ryan, anything else to add before I take away everything Stella's prepared about 5 hours for? Huh? Huh?
No, go on, hand it
I don't
over.
want to
Let's
run.
hear
I
it.
mean, he did his homework, right? He
Yeah.
comes to school, and then some other kid in the classroom starts giving all the answers.
The dog ate my
Okay.
homework, man.
He was looking over your shoulder on the bus in.
Should I give him the chalkboard now, Ryan? It's
Yeah,
up to
Mark,
you.
go on in.
Yeah, I'll take
Go
it.
on, charge him
All
for it
right.
though.
All right. Okay. Go ahead. No
Charge him
erasing.
20 bucks.
No nails on the chalkboard, man. All right. No nails.
All
All right. Go
right.
ahead, buddy.
Hey, my dogs are interested too. Can you hear that in the background? Yeah.
Yeah. Yeah.
Shush.
Yeah.
Thank you.
Yeah.
I'm going to start with yields again, and it looks like a bear flag. Remember last time I was on Face last week, you asked me, we were somewhere in the middle of this range, and I said, I think we're going to resolve to the downside. Come on, guys. We're going to resolve to the downside. You asked, do you think we might get a push towards the upper end, 440? I said, of course we might. And look, we haven't broken yet. And this is
Yeah.
also 50% retracement. There's a lot of confluence here. And but so we're still not out of the woods in terms of breaking below. Come on, guys. Shush. Sorry, no.
I don't know. It looks like
This is
Wile
not.
E. Coyote already jumped off the ledge and he's in free fall. There's a
Yeah,
gap. It even left a gap.
he
So
left the gap. Yep.
yeah, I
Um,
don't know.
and we're getting close to these lows, and below these lows, really, there's nothing. I still believe we're going to end up challenging these lows around 360 and the similar levels in the gilts, and this is because I think economic activity is going to continue to deteriorate. Um, uh, Employment is going to be worse and worse as the year goes by, because let's remember, employment is the most lagging indicator of all. And you're hearing layoffs left, right, and center, and things are becoming more expensive. And credit card borrowing to the max. This is not good for the economy or any economy. So I think we're going to see central banks easing, and I think yields are going to be dropping. What happens after that? It's a different story, but I think the next leg is lower. And I think who was it? Goldman Sachs changed their estimate to 3 cuts this year. Was it Goldman or JP Morgan? One of those. And I kind of agree. Up to now we were pricing 2. I think it's going to be 3 or more or nothing. It's going to be one of the two. So for obviously for no cuts, I think we need to see inflation really shooting higher, which on the demand side, I don't see it. I don't see it happening. There's big there's still big deficits in the US everywhere, so there's going to be more borrowing needed, and that's clearly not good for bonds, and it usually drives bond yields higher. But uh, worsening economic conditions and rising unemployment, they always have more. Should I put it?
Wait.
More firepower, more weight. Yes, there you go. Than anything else. So the immediate reaction, I think, is going to be to see lower yields, and then after that, obviously, we're gonna reassess. The question now happens to be, what happens with stocks? Because if yields go lower, the natural reaction is that that gives support to stocks. But if yields go lower because the situation is really horrible, then I think we can see both yields and stocks move lower at the same time. And I think that's likely. That is likely. We are at a very important level here in the S&P, testing the previous lows from earlier this month. And really, the support I see is around 52, 50, 53, the first support, and then the big one is 4,800. Having said all this, there's so many question marks, right? Because of Trump and his tariffs and his policies. If we see any kind of headline that says, yes, okay, we're going to reconsider, maybe delay them a little bit, it's going to be a hell of a squeeze, in equities. So we have to be aware of that. Unless that happens, I think equities are still bearish, because remember, I've been talking about 56.80 for a while. We broke below, broke above. The market wants to inflict as much pain as possible, as quickly as possible. So I'm sure lots of stops got taken on both sides, but then we resumed lower, which is kind of the normal direction given the general macroeconomic environment and tariffs and everything that's happening. So I still think the direction is lower now, unless Trump does a U-turn with tariffs, in which case all bets are off, and I really think we might squeeze higher quite considerably. So for now, yields lower, equities lower. That's my main thesis. You mentioned the gold and the metals and miners. Gold making new all-time highs is really not slowing down, so I wouldn't want to go against that at the moment. Are miners underperforming? Yes. Is Newmont underperforming? Oh, yes, even more so, because the latest results were pretty bad. It looks like management is not doing a great job there. But I'm not an equity analyst, so I can't go into details, but it does look like they're underperforming. I still think miners have to start catching up. The problem is when equities get sold, every equity gets sold, even the ones that are backed by that are in the in the mining industry. Gold goes make new all-time highs. Well, if every equity gets sold, they're going to see some pressure as well. That's why I think they're underperforming at the moment.
Well, they did make new highs, GDX
GDX,
with the
yeah,
market
okay.
going down,
You're right, yeah,
down.
you're right.
So
They're just not
they,
performing as well as gold, that's for sure.
oh yeah, up until recently, they're closing the gap a little bit, but um,
Yeah,
anyway, I would suggest, and I still think there's more left in silver to
I
fill
agree.
out that. If you put your weekly up in silver, I still think it's going to the top of your blue channel.
Yeah, yeah, I think
Where's that coming?
logic says that, and there's all this talk about the massive supply shortage and everything that's happening, and gold and silver moving from from the LBMA to COMEX for deliveries. I don't know all the details of that. I'm not an expert on that, but there seems to be a big deficit for 3 or 4 years now, and theoretically silver should be outperforming. It's not. This is probably because gold is always the leader. It makes the first move, and then the other metals to catch up. At the moment, it's not performing as well as gold. Gold-silver ratio is still above 90. It's at the top of
Yeah,
this channel, so it's
yeah,
kind
it
of
looks like it wants to break out.
it does. It does. So, I still prefer silver over gold because of the ratio at these levels. But of course, in the short term, can gold outperform? Of course it can. I like
Yeah,
platinum a lot as well, and I've been talking about that, and it is outperforming both gold and silver today, but it's still in the middle of this
yeah.
this wedge, which I think theoretically should break to the upside, and then after that we'll have a look at targets. So I'm long both for silver and platinum, um, and 32.42 and 23.10 in silver. That's a long way below, and my first target I think is going to be, well, first of all we have to break 35. These highs here,
Yeah,
34.85.
yeah.
After that, I'm going to start looking for targets to start unwinding. But until that happens, I'm just letting it run.
Where's the top of your blue line come in price wise? Just
Oh, that's a
guesstimate.
good question. Hold on, let me go to
You
the
have to pull it
weekly.
down.
Yeah, actually, let's do that.
Yeah,
37 and change. Yeah,
yeah.
that's not a bad level.
No.
Let's see. One day at a time, and it needs a lot of patience. I've talked about this many times in the past, and I still believe that silver is going to be outperforming, but it lags gold initially. Um, Cryptos are not doing well. Bitcoin is still the leader. Bitcoin is gold of cryptos, and I guess Ethereum is silver. It's still above 72, 73, 74, which is huge zone, a huge area of support. I think that'll probably get tested, especially if equities keep going lower. The problem is Ethereum, because Ethereum is breaking down. It's broken down from this support trend line, and it's I've marked the zone here, kind of a rough zone, and it's looking like it's breaking below that as well. So it's really not looking good at the moment for Ethereum. And I personally will look to maybe pick some up if we do see a proper breakdown. Haven't looked at the levels yet, but I wanna take a punt on that at some point.
Why?
Yeah.
Because it's the age of Ethereum. Age of Ethereum.
Oh, something like that. What happened?
Ethereum. Huh? Is
What
that
happened?
why?
I heard a lot of support resistance stuff get broken. Do we get any
Uh,
do we get any data or something? No.
I don't know.
Okay. Anyway, um, that's pretty much it
All
for
right.
me.
All right. Well, thank you.
Thank you,
Thank you.
sir.
You're Silver Baron. Thank you very much. And Grega's here. And Grega, good morning. Thanks for
Good morning,
stepping
man.
up to come in. Top of mind for you today, buddy.
Well, we are in a risk-off mode. We clearly definitely should respect what the market is doing and just be prepared for more, especially because we have seen a pretty aggressive close to the downside last Friday. So I think that
Yeah.
this current weakness will just even resume low
Accelerate.
this week.
Yeah. Okay.
So can you see the screen?
It's coming up. There you go.
Okay.
Yep.
So like Stelio said, US yields and the stock market are trading both to the downside with pretty tight correlations, and obviously gold is acting like a safe haven. And I just think that the US nodes, when looking at here, we are just breaking this trend line resistance. So I think that treasuries have room for further upside. And I just think that Japanese yen will see even more upside in this risk of environment. Earlier, Dale, you mentioned that dollar yen is making a very nice reversal to the downside. We are breaking this channel, so I think that dollar yen could even start moving back towards this 147 level. Keep in mind that we definitely have been in a very strong downtrend here for a while, and this recovery so far doesn't look impulsive either. So I think that's a correction, and with more weakness on the US yields and stocks at the same
Could
time.
this correction have been wave 2 and now we're in 3 to the downside? Or
No,
was this correction of 4 and now we're going to finish 5?
no, actually, what I assume we can see is that we are trapped in a very big triangle here on
Okay.
dollar yen. So I
Got
would
it.
be looking for a move down towards 78.6%, which is around
43.
144, yes.
Yeah.
So that would
Okay.
be my main idea regarding Japanese yen. And I still think that dollar general could continue lower as well. We are just now consolidating still above this level back from November of 2024. Not really convinced that wave 4 is done here. We know that market could be very volatile this week. I would not rule out the potential new spike higher. So if we see 38.2%, it comes in around 104.50. I think that would be a very nice resistance up there. Euro dollar with very nice support around to 107. So I still think that the euro has a chance to move to the upside. Maybe we'll get some short covering rally on stocks, and will be maybe enough for this one to move to the upside. But I definitely
Are you
also have.
surprised? I want to ask you, Greg, are you surprised? Because I remember, discussions that once a dollar peaked, that's when it was, around 108 or 110,
Yes,
that
I'm
that would
surprised.
really that would really light up equities and light up risk.
Yeah,
So are you a believer now? The new regime is, and it happened again last week where before this market fell, there was dollar stability and the market was able to recover because there weren't outflows. But then once the dollar started rolling over later in the week, that's when the market caved too. So are we in a weaker dollar is risk off now?
yeah, it looks so. And this is just maybe indication that there is serious, where it is, serious, these are some serious signs for recessions, I think,
Yeah.
because we have the
Okay.
US yield to the downside, and also stocks moving to the downside. So I think that US dollar is obviously impacted by lower US yields. Probably the US dollar went just too high, too much since November of 2024, and I just think that market has to reprice this, because everything what Trump just said now obviously seems to be coming in play, but markets are surprised quite a lot. No one maybe believed that he will really took these actions, that he is now actually making some serious steps. So I still think that dollar will remain bearish, even if stocks would try to stabilize after some serious drop. I think that this will push the US dollar even lower. So I think that this is just now a temporary consolidation here for the
Got you.
US dollar.
All right.
Maybe regarding gold, you talked about gold also earlier.
Yeah.
I'm not sure how investors will see gold if suddenly, let's say in the next few months, we get some recession, economic data for recessions. Then we know that most likely even gold will sold off as well. So usually when you got real recession, you will see even metals coming to the downside. But then this will be the sector that may try to bottom the first one. So
Yeah.
I would be
Right.
still very careful with metals. going into this year, at least at these levels. I just think that it's good to be aware of some slowdown. We have very nice 5 waves up here that could extend to 3150, 3200 maybe, but that's still where I see it right now, trading at the late stages of this extended black wave 3. So I think that this higher degree black wave 4 can still show up, and I just think that based on the current environment, it's definitely not best place to look for potential opportunities on the long side. Definitely not idea to short. Just hold it if you have it or book some. So
I'm shorting miners, in particular Newmont. Tell me how crazy I am to do that.
let me check here.
And then before you go, I wanted to, for my own edification. Okay, so that's the gold silver ratio. You're right.
No, that these are gold miners.
GDX.
Yes.
Okay.
Yeah,
All
so I
right.
think that we have room for more upside, but that's some serious resistance that's being tested right now. So I just think
Yeah.
that
Oh
this
God,
may
I'll
be
take
next
that.
pullback. Yeah.
Yeah. So that would that pullback equate with the pullback for
On gold.
wave 4 and gold?
Yeah.
Okay. You know, Elliott wave is really, you have to put a lot of energy into it. But I was wondering if you could explain to me and our viewers the character of an X wave, which seems to be kind of a wave that doesn't really fit into a lot of patterns. It's almost like a way to explain how like an aberrational wave can occur. Am I correct?
Actually, how I try to describe the X wave, it's just a connector between one correction and the other correction. So
Okay.
that was, for example, one type of a correction. It
Yeah.
was in 3 waves. That was the pause, and now we are in the second phase of a correction. So this one just connects the dot between one pattern and the other pattern. And
Okay.
whenever this wave X shows up whenever there is a 3 wave structure, because wave X should not unfold impulsively. Otherwise, impulses means that you have continuation of a trend. But if it's only a 3 wave movement, then most likely suggests that higher degree correction, the complex pattern or a pause in the market will just continue even further.
Yeah. Got you. All right, I really appreciate that explanation. I thought it was, my imagination. I thought it was like a tsunami or a rogue wave that Elliottians put in there too. Because I saw a count with WTI where we could still go to $62, and then there's an X wave that could take you up to 80. So anyway, it completed this decline at 62. And then he had an X. So
Well, I always, when I'm looking at the markets, I'm trying to analyze and present the most clearest wave count possible.
yeah,
So if
right.
there is a chance to avoid WXY, then
Yeah,
I will avoid it, because someone who is trying to label all the times WXY corrections, it means that they just want to simplify things because it represents the complex correction.
okay.
So I
Got you.
think the most important is that when we look through the Elliott wave eyes, that we try to focus on a very clear, visible patterns that we can recognize them in a second.
Okay. You know what, Grega? That's something that you should have in some bio information that separates you from other wave guys looking for shortcuts. So I think that, so there you go. Grega's hardworking. He doesn't need to, cut the time out by simplifying the wave count. So I think that's about it. I know we have, let me just check to see if our guest is here today. And everyone loves Mark. So, and we all need people to help us make sense, right? Is he here? He is. Okay. So, team, great job of prepping. Best trade of the week. Let's go around the horn quick. Grega, what are you looking to do?
I'm looking to buy the euro dollar dips If we see
Okay.
107.30, I think that's a very nice level to join this trend.
Okay. Stel? Oh, the guy's what a rock star. All right, he makes an appearance and he's already at the after party. Okay, Ryan, are you here?
I'm still here, mate. I'm always here.
Anyway, you come for the show. It's a new rule, okay, Ryan? You come for the show. You don't cut out until the audience leaves. Anyway,
That's what the boss says. Yeah.
yeah, really, I'm going to have a talk with him. So, um, best idea or narrative that you're looking for this week to unfold with everything going on?
Yeah, I'm potentially looking for a tariff fade. If we get another move like that, I'm looking at dollar mex again up towards the high 20s, 21s.
For a
Otherwise, I'm just
sale?
managing. Yeah, for a short.
Okay.
Bit of a rinse repeat. I'm still short from the last last deadline, but I might get stopped out of that if we do get a rally on my trailer. And just managing my gold and seeing how high this wants to go.
Yeah, maybe you'll get that 32.50.
Could
I
do.
tell you what, you're the only trader I know that almost all your trades are long-term capital gains or losses. I mean gains.
I wish they
Huh?
came quicker.
Anyway, yeah, yes, I've never met anyone like you that could just get married like that. Okay,
Yeah.
so thank you, Ryan,
Cheers,
Grega,
mate.
for showing up, and Stel, you're not here. Not going to thank you. Everyone, what a great time to have Mark with us. Mark Chandler, at Mark Making Sense. How are you, buddy?
Surviving, barely, if I could say that.
You're what?
I said we're surviving, but barely. I mean, this is a very unusual circumstance. I mean, I think we're like at a precipice of major changes, geopolitical changes,
Yeah,
perhaps even the role of the dollar when everything's said and done, huh?
yeah. I mean, yeah. This is what all those gloom and doom books, blood on the streets, crashing dollar, all, stock market vulnerability, everything that, people wrote about 30 years ago is not theoretical anymore. We're living through it, aren't we?
Yeah, I mean, I think that there's always two ways in which this could happen. One is encroachment. Somebody like perhaps China or a group of countries eating America's lunch. But that's not really what's happening. I suspect that it's a case of abdication. The US is just giving up. And you
Yeah,
know what illustrates it to me is the measles outbreak. It's in 4 or 5 states now
yeah,
and in Mexico. It's not just a disregard for the community of nation states that the US helped build in the last 50 years, but it's also just a disregard we have for our own people.
yeah, yeah. So we've turned inward, even with our own citizenry. So I know, how can you break a trading system that's been built up for 50 years and not have shock waves?
Yeah, I think it's a bit of what is this all based on? You know, even when we make a trade, right? Our word is our bond. We make this. We're not signing things. The papers have already been signed. We tell someone we bought something, and that's our word. That's our commitment, and that helps after repeated interactions. That builds cooperation. But what we
Trust.
have in the U.S. now is transactional. I mean, real estate is a one-off transactions. It's not the type of repeated interactions that foster cooperation. And so I think that that once we lose countries' trust, others' trust, the system really is it's sort of like a cancer and weakens all kinds of relationships, weakens the trust, undermines the system.
Yeah. So, Mark, I knew there was, reason behind you, lightening up and getting out of your apartment in New York. I mean, you foresaw that this could end up being that this kind of thing could manifest as an outcome.
But
Um,
I'm still very surprised. I mean, that it's sort of like everybody's we've seen the same cartoon where picture of President Trump shooting himself in the foot. Who would have thunk that we would have done these things? That like cut the nose to spite the face. Give you an example. Last week, the U.S. Refused to pay its like financial like dues for the World Trade Organization. $25 million. It's not even a rounding error.
Right.
You know, it's not a budget savings thing. It's more of a stick your finger in the eye of others.
Yeah. Yeah. So when we have this crisis, we're alone in it. Because
Yeah.
you know what they say, it's like, it takes a long time to build trust and takes, not a long time to destroy it and possibly never repair it again.
Yeah, though
So,
when it comes to the dollar, though, you know, there was this article, Katie Martin, who's an excellent journalist in the Financial Times, sort of suggested that Europeans have about $9 trillion worth of U.S. equities, and this might be this watershed where they repatriated. And of course, we did see the euro hold up well last week. U.S.
yeah,
stocks fall. It fits into that story, but I kind of think that we want to be careful in going that far out when there could be just a typical sort of cyclical factors going on, sort of like Occam's razor, right? The simpler solution is best. And that should be the first attempt. And what happened last year? Europeans bought about $108 billion worth of U.S. equities. They bought the dollar. They drove the dollar higher. They helped drive U.S. stocks higher. So they're
well,
unwinding some of that.
wasn't it also, I've been told, like Luke Roman said, it was the Chinese that were, instead of buying bonds, were recirculating those dollars into NASDAQ 100 stocks. And when we told them we didn't want their money anymore, that their liquidation was a big part of the drawdown.
Yeah, I don't know if I mean, it could be true. I just haven't seen that in the data yet. I
Okay.
have seen Europeans record purchases of U.S. equities. And of course, yeah, it's hard for me to believe that's really so much of a Chinese story. But of course, it's one of those things, Dale, early in our careers, people would blame Bank Negara, Malaysian central bank, or they blame George Soros for inexplicable market moves. And the Chinese become this whipping boy where the evidence, Chinese own data is very scarce. It's not very transparent. So China is an easy one to blame. I'm not sure if I'm convinced of that, but I
Okay.
do think that we should probably be thinking that this is just a portfolio adjustment in response to these new macroeconomic factors, slower U.S. growth. A lot of economists revising down U.S. growth, pushing interest rates down, downgrading U.S. equity holdings. And so to me, this is still a cyclical story. I'm not convinced yet that this is, it is true that Canadians and Europeans seem to have a consumer boycott against the U.S., and it's
Yeah.
also going to affect tourism. But I'm not sure that we're seeing a capital strike quite yet. I become
Okay.
more convinced of a capital strike is if stocks fell and bonds fell and the dollar fell. And we're not really
Okay.
seeing that. We're seeing a lot of money flowing into the U.S. Treasury market,
Right.
fixed income market as a safe haven from equities.
You were bullish bonds a few months ago, Mark, when we talked. You
Yep,
said that's where you're parking. That's where you parked the profit from your real estate sale in
I like to think it's
bonds.
a principle, maybe more principle than profit from the real estate transaction. But yeah, I
All
think that
right.
the U.S. economy is going to be slowing down. I mean,
Yeah.
I see over the weekend, Goldman Sachs revised up its odds of a recession. I think it's coming, and I think that the government cuts, the layoffs that we're going to be getting from the government sector, it hasn't filtered yet through to the jobs data, whether it's the weekly jobless claims, whether it's the government programs, or even this Friday we get the non-farm payroll number. It still looks like a fairly steady employment situation, but I think that the it's just on the horizon. We can see these things beginning to pile up. Job cuts are coming. It takes a while for it to filter through into the system. Slower growth. The crackdown. Of course, nobody likes illegal immigration, but the crackdown on legal immigration, is also going to slow the U.S. economy down, have a real cooling effect.
Yeah. Yeah. So there were a lot of sectors of our economy before this election that were already in a recession, like manufacturing.
Yeah, that's the amazing thing. You know, we talk about bringing manufacturing back to the U.S., and we will, but it's not going to be because of jobs. You know, the manufacturing sector employs only about 7% of Americans. That means the rest of us who are working, leaving aside, say, 1% or so in agriculture, the rest of us work in services of some kind. We're going to get so that this manufacturing, yes, we'll bring back manufacturing capacity to the U.S., but it's going to be robotics and automated. It's not going to be a lot of jobs.
No, it's going to be AI.
Yeah, I mean, you see some of these modern factories in China, robotics.
Yeah.
You see this whole say factory floor full of robotics and people just walking around to supervise the machines.
Yeah.
You know, this is the future, and I think that behooves young people then to, and I tell this to when I can to young people, we got to begin investing in skills that AI cannot replace. Critical thinking, being able to evaluate conflicting claims. You know, the Financial Times might have an article about why is the U.S. the last industrialized country with health care, and the Wall Street Journal might have an article. You know, this is creeping socialism in America, national health insurance. What's happening to us? And when I ask people, you know, when I ask students or even my colleagues how to evaluate, we're often swayed by the last thing we read. We need to develop these critical analytic skills that help us understand and decipher what's truth and what's not, and it makes us better decision making. And I think these are something that the AI can't quite do yet.
Okay. Can you teach me in a few seconds? Because I don't know what to believe anymore, except my charts.
Yes.
And
It's always,
my friends.
yeah. So
Go
I'd
ahead.
say one thing that I really believe right now is that there's a strong correlation between the dollar yen and the U.S. 10-year yield.
Okay, I believe that. Yeah.
So you have, and you should, and what's amazing to me is that it's a stronger correlation between the changes in the U.S. 10-year and
Yeah.
dollar yen, stronger than the differential.
Wow.
So people say, oh,
Yeah.
it's really the differential, but it's really the treasury side of that equation that really drives it. So you want to know where dollar yen's going? Have a view on treasuries, and that'll get you 3/4 of the way home.
Yeah. So yeah, I think the end's going sharply lower, but
And that
with
would make
yields,
sense
I
for what
think
we
it
studied.
wasn't this. I mean, this was like just a correction in bonds that we had when the market recovered. And did you notice when the dollar wasn't caving last week, Mark? That's when we had a few days of equity buying. And then once the dollar started caving late in the week, that's when the SPOOs gave up the ghost.
Yeah, you know, it's interesting because this relationship between, say, the dollar, using the dollar index as a proxy and the S&P, you know,
Yeah.
they were negatively correlated. That is, dollar index would go up, S&Ps could fall, and that really
Yeah.
lasted from about the middle. I'm looking at a 30-day correlation. That's about as far as my typical trades could last, anyways. But
Yeah.
the 30-day rolling correlation has been negative. It's now just about to turn positive for the first time since the middle of December. So the first time in 3 months. So that would be in line with what you're saying. Falling stocks mean a falling dollar in the current environment, but watch those correlations.
Yeah. All right. So when we look at what else is on the horizon, I've been talking about this for a while, and I'm not happy about being right about it. But when I saw President Trump and Netanyahu together on stage, and Netanyahu was almost orgasmic because Trump was delivering, and now they're moving carriers into that space and ultimatums, and then tagging the Chinese for using Iranian oil that they're processing. Could it be, because this is what happens, that when an economy turns south, like the recession that you see coming, is that when at times nations go to war to distract and unify the country? Do you think this is in the cards, Mark? To me, it looks like it's written in cement.
Yeah, you're very depressing on a Monday morning.
Well,
I mean,
you know what? We could do this call any day, and I could be just as depressing.
well, that's an optimistic thought. But yeah, I do worry that we're coming to like the precipice of a confrontation with China. It's not just the tariffs. And it's not just the tariffs like you were saying, but they're not just going to tariff, like, say, crack down on Iranian oil, but they're cracking down on Venezuelan oil. And besides the trade, these are secondary tariffs. But what concerns me is, this decision by C.K. Hutchison to postpone the deal with BlackRock over all those ports, including those 2 ports in Panama. And so people say, see, this is a communist country getting involved. But I don't know how different that is than the U.S., both parties objecting to Nippon Steel buying U.S. steel. And Japan is an ally of America's in a way that BlackRock is not an ally of China. So so of course governments get involved with this, but I think this is a provocation. I think that this is the kind of thing that the Trump administration, some of the people in the Trump administration, will want to seize upon to show that China controls the Panama Canal, and why we, the Americans, need to take it back. I worry about the tomorrow. I think it's 3 cabinet levels: Commerce, Treasury, and the Trade Representative Office are supposed to have reports on China's trade. And of course, these reports in the U.S. are going to show that China unfairly subsidizes their companies and takes unfair trade advantage, takes advantage of the world, including the United States. And then, of course, we get those reciprocal tariffs on April 2nd. And the Chinese have already warned publicly that if they're subject to these tariffs, they will take strong retaliatory measures. We're not sure what that means, of course.
You know what it means, Mark. It means the things that we don't make that we need, that we depend on every day, while it takes 5 years to reshore manufacturing.
Yeah, it could be a manufacturing, but I wonder if it's going to be even more subtle than that.
How about they produce all of our prescription drugs?
Yep. Well, I mean, that's also changing, but where I think they can have us by sort of the short hairs, so to speak, is critical materials and minerals. These we need for both military and civilian purposes.
Yeah.
And they don't only have the metals and minerals there, because they're not so rare despite the name, sort of like cryptocurrencies. They're not really currencies either, right? But
I
think what happens is that China also has its processing facilities. So it's not just digging up this cobalt or other rare metals, but it's being able to process them. And they've got that part of the supply chain in control as well. They could really hurt us if they wanted to. And I think this is where push is coming to shove.
Yeah, I mean, when the trade war was about to begin, they said they're willing to fight any kind of war with us. Pretty strong.
Yeah, it's scary. I mean, I think that we as, like I say, people in the United States, for the most part, have really avoided major wars. We haven't had a draft since Vietnam. But the kind of world we're going to leave for our children and our grandchildren seems to be much more dangerous. It's not just about, what struck me was last week I saw this clip of President Trump, and he was talking about selling our allies our latest fighter jets. But he said we might remove some of the capability because we don't know how long they're going to be allies for. And this goes beyond the trust. This means that in 2028, regardless of the U.S. political outcome or the midterm elections, or we've got a couple of congressional special elections this week in Florida, a couple of seats that Trump had carried the region by 60%. And it looks like at least one of those seats can flip to the Democrat side. But anyways, I think that even come 2028, no matter what happens in U.S. politics, can Canada trust us?
No.
Can Denmark trust us?
There's been a breach.
Asia trust us, and that's what concerns me. I think that China is going to, assuming this is like a game theory, China wants to probe, I think, for the U.S. commitment in East Asia. And so that's why I don't like this idea of trying to call the U.S. Isolationist. The U.S. is not isolationist by any stretch of the imagination. It's unilateralist.
Yeah.
It's trying to impose its will on other countries, including those who buy Venezuelan oil, like we did last year, or Iranian oil. We're talking about imposing our will without the WTO, without the UN, imposing the will because we're the strongest country in the world. Might makes right.
Yeah. So you just the way I look at things, Mark, I just have to kind of just trade it.
Yeah,
It's
but
the
so I
only
think
way.
what does
It's
it
the
mean to
only
trade?
way I feel in control is to trade what I see on my charts.
Yeah, no,
And
I agree. And I think that's why I like about the trading and about the discipline of technical analysis. With fundamental analysis that I spend most of my time doing, how do you know where you're wrong?
I know
Uh, and
Schwager
technicals help.
says that.
Yeah, technicals help us measure, help us quantify where we're going to be wrong. 'Cause everybody knows what to do when they're right. It's when we're wrong that really is the measure of us. And I think that for me, the broad scenario is U.S. economy is going to be slowing, rates are going to be falling, the dollar follows the Fed. When the market, as the market gets more in its head that a Fed cut is coming,
You were
which might not take.
bullish here. You were bullish here last time, Mark, 3 months ago. You talked 108, 109.
Yeah, and I
I
still thought that
remember.
there could be. I thought there could be still on this pullback. I was afraid that maybe someone mentioned that before on the earlier part of the show, but 107, 107.30, to me, that's
Yeah,
important support. I thought we could go through that, but
yeah.
it's holding. We might have to go back down and test that area, seeing what
See
happens
how
with the
look
tariffs.
at all the confluence there. You have the
Yeah, so
50-day moving average there and everything. Yeah, flush people out, maybe go to 660 would be 38% back.
yeah, so
That'd be
I think that
enough.
yeah, I think in the big picture of things, we should be looking for stronger foreign currencies, weaker dollar, lower U.S. interest rates, and possibility, leaving aside this Q1, which is really skewed. I mean, think about the Atlanta Fed. Even now, when they say what the gold accounted for, we still be contracting, which is really more than the economists expect, more than the Federal Reserve expects. But maybe leaving aside Q1, it's really about the slowing down. It's going to show up in the labor market around the middle of the year. That's going to prompt the Fed to cut. It's not going to be that inflation is back to target. It's going to be that the perennial problem, sustaining aggregate demand. And we're going to see the weakness of the labor market, and it's going to raise concerns about how strong consumption can be going forward.
Banks are already sending letters out to their customers to ask about, it's voluntary. Are you doing well? Because they're worried about credit balances now.
Yeah,
And
we're
and
seeing
go ahead.
Yeah, no, we're seeing, I think to your point, we're seeing mortgage default delinquency rates rise, credit card delinquency rates rise. And,
Yeah,
we're going to have this big reset in early June, I think, when the student loans and student debt becomes part of one's credit rating again. This is going to be a
right.
hit for a lot of people.
20 million. 20 million, I believe. So the key is in a crisis that the crisis is that you miss the opportunity. Even though humanitarian wise, we don't want to be opportunists, but that's our training in the markets. So it's not like we're taking advantage of people. We're just being good stewards of our own capital, right?
I think so. I think that, that appreciating the moves in the market, trying to preserve capital, especially in these times where some correlations have broken down, old relationships don't necessarily work. Uh, we owe it to ourselves, the hard work, we owe it to ourselves to be disciplined and prudent about what we're doing as it's really the respect, the markets could hurt us, the markets can make us rich. And it's really about being prudent about it, disciplined risk takers.
Yeah. And trading what you see and what kind of signals you're getting. It's for the first time in my career, Mark, I really noticed that the stock market has been politicized. It seems that most of the bears are Democrats, and the new bulls that have been bearish throughout the whole bull market, the new bulls are the Republicans, and they're trading the market with their hearts. They're buying Tesla. Okay, they're bullish the market, and I've never seen this in my career where because markets do well and they do lousy under both administrations. But it seems to be, if you're not bullish a market, you must be a Democrat.
Yeah, Dale,
Have
to
you
your
noticed
point,
that?
yes, but I see this in other data too. I think this is partly what's going on with inflation expectations. The very clear partisan divide. Uh, Republicans do not expect inflation, Democrats do. And so when you look at these numbers, like the University of Michigan's consumer confidence numbers and the inflation numbers, we have to recognize that below these aggregate numbers is a great element of divergence, partisan divergence in the U.S. on perception. And this is part of the reason why I think that Powell was partly right for playing down the soft economic data, which are surveys skewed by these kind of partisan divergence, as opposed to the real sector data. I think he's a bit too cautious, waiting for the soft data to filter into the real sector data. It might take a little bit while longer. I think it's going to come around middle of the year, but it's going to be coming. And by that time, monetary policy will be seen to be a little bit behind the curve again.
Yeah. Do you have confidence in Besant's grand plan? That's what he's talking about, is a grand plan, the world coming together and not spending money on defense. I think that's his kind of philosophical dream that he has. And he
Yeah,
says
but
he has experience doing that. I don't know.
yeah, I worry about the this great strategy. Even including over the weekend, there was talk that the reciprocal tariffs April 2nd, and it's
Yeah.
still not. It still hasn't been decided. That these things are
Yeah.
still like in flux. And so, yeah, I'm not convinced that there's a big strategic plan. And the election came out the way it came out, and we sort of have to live with those results. And I just don't think that there's a great plan. And I think there's a lot of, but we see this with this. I mentioned about the 25 million cut to the World Trade Organization, where there's measles outbreak in now 4 or 5 U.S. states spilling over to Mexico. It just seems like a general disregard and disinterest, but mindfully so, and like willingly. Like we all know. I think as parents, we know we want to get our kid vaccinated, and before they go to public school, we have to before they go to public schools. And there's a reason why you can see this so clearly. Measles, high cases of measles, vaccinations, no measles. We can solve these problems, like we can solve the economic problems. I think, to me, this is what I mean by abdication. We are our own worst enemy. It's not China eating our lunch. It's not these countries like Vietnam or Mexico, small countries, or even Ireland, who might take advantage of the situation with the low taxes and the U.S., all these loopholes in the U.S. We are our own worst enemy. We can fix our own problems. Maybe this is part of me that's Jewish, that thinks that, that the Messiah is coming, but he's not here yet. And that
some people believe
us.
he is.
Yes, and so my people think we're waiting for him, but he's not next door. He's not next door. He's not at Goldman Sachs. He's not at Merrill Lynch. We can save our own butts by doing the right thing, and I think we all know what the right thing to do is. Vaccinations, for example.
Yeah. Mark, I tell you what, thanks. My bill for this session is in the mail, and I'm glad that you got you got to verbalize, and you're talking about things that people think about and are less willing to speak out, which is kind of a weird thing, which is a change. That people even have second thoughts about expressing themselves.
Yeah, Dale,
Kind of
there's
a
this
weird
quote
vibe, huh?
I came across this quote, and I guess it's disputed who said it, but they said it about Germany. They said 1/3 of the people watch the other third of the people kill the other third of the people. Is this what America is becoming? People are censoring themselves. A year or 2 years ago, corporate leaders were embracing DEI for the same reason that I would, because it leads to better decision making when you have diversity of people, not just skin color, race, religion, gender, all those stuff, but how people solve problems. So neurodiversity. And now Trump says it's not good. Everybody's moved away from it. And I see this in the self-censorship, even the AIs that I use to generate art for my blog. The censorship there is just remarkable. And to me, this is the age that we live in. We got to requires creativity to work around these barriers.
Yeah. Well, let me know when the club starts. I'm a member. And I always appreciate talking to you, Mark. You're a watchman for us. And when you bring you're not the type of guy that I've been talking to you for a decade. You're not an alarmist, okay? You're far from it. You would always talk me down from the clouds, okay? So take what Mark says and think about it, okay? Because we have to think, and we can't be afraid not to speak. Thanks for your courage today, buddy.
Thanks, Dale. Good luck to everybody.
Yeah, really, Mark. Great to hear you. So follow Mark on X at Mark Making Sense, and follow his calls on the markets, because it's going to be important. He saw this coming a while ago. I know that's why he, got out of sold his apartment in New York City and bought bonds. He didn't buy the Mag 7 or Apple because it's safe. Anyway, guys, have a great rest of the day. You could join the team in 15 minutes. Remember, don't just count your pips, count your blessings. And I'll see everyone for Turnaround Tuesday. Looks like we're going to have a little dollar rally to sell and a break to buy, like Grega talked about, and Mark. So do your fibs, do your work so you can execute, okay? Instead of impulse trading on the fly. Adios, everyone. See you tomorrow. Thanks again, Mark.